don't close my eyes. Halfway on a slow move. It's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land. So I'm someone to hold true. Keep you cool when it's still alive. Won't let you down when it's all ruined. Just the same way you showed me. Showed me. You showed me love. Glory from above. Regard, dear. It's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nose dive in the floodlines, tall tower, milk crate. It's the same way you showed me. Cannonball off the porch side, older kids trying off the roof. Just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it out when the sun is ruined. That's the same way you showed me. Showed. You showed me love. Glory from above. Regard, dear. It's all downhill from here.
Remember life, remember how it was. I'm G, Michael Jackson, all in shit. Say what up to Randy, the shoe. Say what up to Penny. Say what up to life and my talent. Running on my bikes, running up. Not for me, 18, still in granny 6. Give me something sweet, which I might like, immortality. This is life, life, immortality.
That's the way every day goes. Every time we've no control. If the sky is pink and white, if the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes. Halfway on a slow move. It's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land. So I'm someone to hold true. Keep you cool when it's still alive. Won't let you down when it's all ruined. Just the same way you showed me. Showed me. You showed me love. Glory from above. Regard, dear. It's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nose dive in the floodlines, tall tower, milk crate. It's the same way you showed me. Cannonball off the porch side, older kids trying off the roof. Just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it out when the sun is ruined. That's the same way you showed me. Showed. You showed me love. Glory from above. Regard, dear. It's all downhill from here.
Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is January 31st, 2023. And Bitcoin is up approximately 50% since the start of January 2023. Yet and still, many people are still on the sidelines. And even worse, some of those people are even fading this trend and betting short, right? Going short, like putting money on the price to go down, okay? So today we're going to talk about why that is. And I've thought a lot about this. We're going to talk about why that is. Why in such an obvious trend, right, where the price has literally been going up for 30 days straight, a lot of people, even us in this community, are still kind of on the fence and like, could go up, could go down. You don't feel that 50%, do you? Even though the price for literally 30 days straight is up 50%, you do not feel like it's been up 50%. We're going to talk about that because it's very important in terms of trading psychology. And then we're going to tie that into how you use that to your advantage to make money, okay? I've never been really into showing off my gains and my positions, but let me just say because, you know, if you are listening, following this channel, follow my work, you may not know if I'm a winning trader or a losing trader, right? So I understand sometimes why some people show their trading results. Let me just say this. Some positions that I hold are up thousands of percent, and that is not an exaggeration. Thousands, multiple thousands, not 1,000, not 2,000, not 3,000. Thousands of percent. Okay, obviously, I'm talking about leveraged positions, right? But still, how can that happen? You need trading psychology has to play a part in that. I'm not doing thousands of percent because I'm hot and cold on my calls. I'm hot and cold on the trend. You have to ride the trend. So we're going to talk about riding the trend and how to recognize the trend, okay? And why some people, despite an obvious trend like this one right here, can still kind of see, I mean, everything's possible, right? But not everything's probable. I mean, it's hard to even look at this and make a bearish case, but we're going to talk about how that is and why that is and all that stuff. So if that interests you guys, then, you know, keep watching. Thank you for joining. It's a rainy day here in the DC suburbs. Cloudy, not too rainy, but a little cloudy, a little bit of drizzle. But it's still a great day, okay? And although Bitcoin has put a 50% move in the month of January, and it's the last day of January, right? 50% plus, right? Because we still have one more day, and we may very well make a lot more gains today. I'll say that February may be even more bullish, all right? So we're going to look into all of that. Hello, Akanksha. Yeah, Akanksha says they will be left behind. For sure. You know, and let me share this. Big account on Twitter. So I'm on Twitter. You guys know I'm on Twitter. I have my Twitter name in the, you know, description, whatever. If you're on Twitter, you can follow me on Twitter. I don't only talk crypto, okay? Because crypto's not my entire life. It's a big part of my life, but it's not my entire life, right? I talk basketball. I talk whatever. I joke a lot on Twitter because, you know, I think Twitter is a great place to laugh. So I go and I laugh at stuff. But I saw this big account, crypto account, and they posted something like, I only see Bitcoin at best going to 25K, and then, you know, it's downhill, down from there. Like, you know, and he was posting some random target to the downside. And then I just, sometimes you just can't help yourself, right? I said something like, I posted a chart. I think I posted this chart, right? And I pointed at just the chart you see on the thumbnail. That's what I pointed, right? That's what I posted, rather. And I pointed at, here, let me get my pen out. 1 second. I pointed at this stochastic RSI, momentum indicator, on the daily time frame, right? It's such an easy read, right? It's so obvious, right? You go on the high time frames, you look at this. I really don't understand how bearish accounts, especially big bearish accounts, who continue to be bearish. First of all, what kind of followers do you have that really don't even think for themselves? And what case are you making? And so I said, dude, you're lying. At this point, I can't believe anybody's that bad at reading charts. Especially when you do it enough, you're lying at that point, right? So I was like, dude, stop lying. If you really are going to fade this, okay, where for the past 11 days, we've gone sideways, and in so doing, the momentum on the daily stochastic RSI momentum indicator has zeroed out, meaning we went from overbought all the way back to oversold. Typically, to put in a move like that on the momentum indicator, you gotta give ground in price, right? You gotta decrease in price. Actually, we went up in price slightly because, as you can see, this channel's kind of tilted up and to the right, slanted up and to the right. In any case, when you're going sideways and momentum's going, we're going sideways and momentum's going down. That's bullish momentum 101. Same thing. When you're going sideways and momentum's going up, that's bearish trend, bearish impulse 101, okay? This is all basic basic technical analysis, right? That I guess everybody should know, especially if you're doing it enough, right? And these big accounts on Twitter, they at least post multiple times a day, so you assume that they're actually doing what they say they're doing, right? So I said, if you're actually short, and not everybody's going to agree with you. That's fine. I don't care. But I just couldn't believe he was actually short or thinking it was going short. I'm like, don't lie to the people. I don't like people who are lying, right? Post your short positions. If you're wrong, whatever, right? But at least post evidence that you're actually betting that way. Because at this point, I feel like some people are just saying it because it's contrarian or because they've built their brand around being bearish. Do you know what I mean? In any case, so I posted it and then I felt bad because I don't want to be mean. I don't like being mean, especially not on social media. So I deleted it. But I said, dude, I think you're lying. Post proof. And that's how convinced I am. And I, again, can be wrong, right? Because this is technical analysis. There's no 100%. But I'm so convinced of this trend that I literally thought this person was lying. Because I don't see anything bearish here, okay? That's the first thing I said. Right? And this is just looking at the Bitcoin chart. Obviously, you all know, if you're subscribed to the channel, there's so many indicators that we're going to look at. And the biggest ones, the DXY, we're also going to look at Bitcoin dominance. Just you look around, it's like, and looking at other altcoins, right? Other assets in the cryptocurrency space. How are you bearish now? It's not even, at this point, a toss-up. It's just either you know nothing about technical analysis, which is possible, and then you're just saying stuff, or you do and you're lying. Okay, so let's look at the first thing. And this is the most important thing I'm going to say today. Anybody investing, speculating, betting on any market that's openly traded should learn basic, rudimentary technical analysis. That's my belief, all right? It's obviously my opinion, but I feel like if you don't, you're betting blind. You're just gambling. And it's not difficult. I say this to family members as well. It's not difficult to learn a basic understanding of technical analysis in 24 hours, 4 hours, just within a day. You can learn basics. what a candlestick is, what a trend is, right? What a pattern is. And then you just play the high time frames and throw on a momentum indicator, right? Just like we're doing right here on the daily. But it is, I think, incumbent on anyone trading in the market to learn basic technical analysis. And that is the impetus, that is the raison d'etre of this channel. This is the reason this channel exists. For not only as an outlet, a creative outlet. It's a creative outlet for me, let me be honest. It also makes me better because it forces me to be disciplined and, publish my reads and think about what I'm publishing and all that stuff. Yeah, great. But I feel like it has use. The use for others that this channel has, in my opinion, is to really spread that message. You don't have to be a pro Elliott wave trader and trade the 5-minute chart and be able to, trade 100x or 77x leverage. You don't have to be able to do that. You don't have to be you don't have to be able to do that to make money. 2, you don't have to be able to do that, period. But I feel like without any basic understanding of technical analysis, you are trading blind. Gone are the days where you're seen as responsible if you decide to invest in something, be it traditional stocks or cryptocurrencies, and then knock on the door of some, Fidelity or Goldman Sachs or whatever, some money management firm that does it for you. That is not an excuse. Look at 2008. How many people lost everything and they were doing the responsible thing? They weren't investing in crypto. They were just investing in regular stocks and what's it called? Index funds and all that stuff. And probably balanced portfolio, all that shit. And they entrusted people that they paid to do this investment for them, to give them financial advice, and people who have licenses for financial advice. If you're not doing your own homework in 2023, and if you don't know what a low is, a market low is, and a market high, then it's your fault. And you deserve to lose. That's all I'm going to say. Because honestly, there's so many resources out there. Decent resources, good resources, bad resources, but their resources abound. They're free. They're all over the place. There's no excuse for you not to learn a decent amount of technical analysis. That, I think, is the most important reason for this channel being. That's why I'm not just saying it's going up or it's going down, because that is, that not that important. I'm telling you and showing you exactly how I make my determinations, how I make my reads, and, down to the smaller time frames. Okay, so I really wanted to say that. I think that's really important to share. Akangshi says, sometimes I feel they are sponsored by the market makers to FUD the general public. I really don't know. I mean, I know a lot of people have sponsors and stuff, channel sponsors, but I think it's just marketing, like Crypto Savvy, for instance. If he starts going bullish, like, all that's his brand. Some people's brand is, I would say my brand is technical analysis, like serious technical analysis, right? Like, I'm really big into technical analysis. You don't see me on here saying, well, the FOMC can do this. I never talk about that. I don't care about that as much. I'm looking at the charts, and everything for me is in the charts, and I'm talking serious technical analysis. I'll even sometimes refer to, some manuals that I've learned from and all that stuff. Okay, so that's my brand. Savvy's brand, just, I'm a bear, okay? And he does it well. He markets it. He does all his thumbnails with bears, and he's always depicting himself as a bear, and he's always saying it's going to go down and shorting and stuff like that. So that's kind of how he makes his living. That's how he builds his following, I believe, on YouTube. And, that is partly his livelihood. Does he make any money trading? I don't know. I really don't know. I'm sure he must have, right? Because we've been down and sideways for 600 some odd days. He must have made something actually trading, but I don't know. People have brands, and they play to those brands. What's another one? Capo. Crypto Capo, I think, on Twitter. His brand is being a bear. And you play to those brands, and you build your following. So I think that's what's going on. A comment says, could you also look at XLM chart and VeChain, as I told you got my paycheck on Monday, which has better ROI. Learning so much from these live streams every day. Thank you so much. Of course. Yeah, I learned as well. I learned by doing. The more I do this, the more I learn. Because there's always things that you miss, but you don't know that you were even missing. So yeah, VeChain is in the shortlist. It's also one of my investments, so we're definitely going to look at that. We will also add XLM. All right, let's get on with the analysis. So, as I was saying, the best way to do technical analysis, in my opinion, at this point in my career, simplify. Don't overcomplicate things. Obviously, if I'm making a trade on really high leverage and I have to make a pinpoint accurate entry, I've got to get into the weeds. I got to go low time frame. I got to bust out all of the tools and tips and tricks that I know of to make that entry, because at that high leverage, you only have a hair's worth of, you don't have much wiggle room. If the price goes against you even a little bit, you're done. So I'm not talking about that. Not everybody has to trade on leverage to make it. But when you're buying the bottom of the market, anywhere in this purple box, that is literally the bottom of the market. Okay? And I said in the beginning of the stream, why does everybody think and feel like, man, we've been up for 50%. That was news to me, because it just feels like nothing's happening. Turned on BitBoy, the BitBoy live stream this morning. Very entertaining live stream, especially when BitBoy's on. And it was said by their in-house technician, their trader, the price hasn't been doing anything. Okay? That is exactly why everybody feels like there's no activity, because they're too zoomed in. This guy was talking about a 15 or 16 hour chart and the 21 hour chart or some weird thing, and then some 15-minute chart and 60-minute chart. If you're looking at this trend and you are looking at it on a small time frame and you're only zoomed into this, obviously it's only gone sideways for the past 11 days. But that is what the novice trader does. They don't recognize the trend, and they confuse the counter trend from the trend. This is the biggest thing you can do to really up your game and really outtrade most people. Recognize the high time frame trend. So you zoom out. If you have to zoom out on the weekly, if you have to zoom out on the daily, zoom out. Recognize the high time frame trend. What happened here? Quite simply. And here, we're not even going to talk about Elliott wave, because we can just look at patterns. Consolidation. It looks to me very clearly like you have a cup and handle pattern. You have a very clear neckline of resistance, very clearly broken to the upside. That should tell you so much. Okay? On the daily time frame, you broke a long-standing resistance over here. We're not even going to get to this yet, but just over here, long-standing resistance. And remember, when you talk long-standing resistance, just measure it. This was 60 days worth of resistance that you broke to the upside. So obviously, if you have even the most modest skills in technical analysis and you recognize this pattern, this consolidation pattern for 60 days, you knew that when we hit 17.3, it was up from there. Another way to know, you recognize a channel. Okay, remember I always say channel trading. You're always gonna find a channel somewhere, right, on the charts. Channel trading is simple but very effective. The bottom is support, the top is resistance, the midline is resistance when you're below it, support when you're above it. You draw your channel, all right? This channel just so happens to be the bear market accumulation. 233 days of bear market accumulation. You're at the midline. You break the midline. Obviously, you're going to the top of the channel. So many ways to know what was going on. So even if you're just channel trading this, this was duh, okay? But now, why do certain people think that we haven't done anything, even though January has been, I think it's been the best January that Bitcoin's had in the past decade or something like that. I don't know. I'm not a seasonal guy. I don't really care. I don't think price gives a damn what year or what month of the calendar it is. I'm not that type of trader. I'm not a seasonal guy. That's another discussion for another day. But all I'll say is this. Most people feel like nothing's been done because these consolidations, these intra-wave consolidations, take longer than the actual impulse. And that is always the case, okay? So the power of understanding basic trends, okay? And I'm going to always fall back to my wheelhouse, which is Elliott wave theory. I think it's elegantly expressed in Elliott wave theory. You have 5 waves, okay? 1, 2, 3, 4, 5. In that 5-wave impulse, you have 2 retracements. Obviously, I can draw that a little better. Something like this, more something like that, okay? In that 5-wave impulse, these 2 retracements, wave 2 and wave 4, are retracements. They're counter to the trend, okay? These tend to take longer than these impulses, okay? We all know, if you are subscribed to the channel, basic Elliott wave analysis, wave 1 typically takes the same amount of time as wave 2, okay? So if you don't know markets and you're like, oh man, I feel like we've been going up, and then wave 2 hits, you go down for just as long as you did wave 1, although you go down more shallow. The time factor makes most basic uninitiated traders, speculators believe that the impulse or the trend is not established because the time it takes for 1 is just as long as 2 takes, okay? So I'm going back to trading psychology. Time. Most traders' main weakness is time. They have no control over the time. Something takes, and they're not able to read the time, and they lose patience, okay? It's not greed, actually. I believe it's time. It's not fear. I believe it's time. Time kills every good trading plan. So, given that, when you understand also that wave 3, and I spoke to this the other day, wave 3 typically takes less time than wave 1 and trades about, on average, 160 to 200%, let's be more precise, 161.8 or 200% longer than wave 1. Okay, all of this information is basic Elliott wave theory. Again, you don't have to get into Elliott wave theory to understand basic trading, but I'm just saying, I'm giving an example. Wave 3 goes really fast, but it takes less time than wave 1. Understanding that, most people, seasoned traders, trade wave 3. They wait for wave 2 as confirmation. They get in and they trade wave 3 either up or down. They trade that impulse of wave 3. But again, wave 3 doesn't take long, okay? But now, let's get to wave 4. Wave 4 typically takes much longer than wave 3. And it can take just as long as wave 1, 2, and 3 combined. Most traders die here because, metaphorically, figuratively speaking, okay, because the time shakes them out. They forget what the trend was because the price just goes sideways, okay? This is just an example to illustrate what I'm trying to get at, which is this. We spent here 1, 2, 3, 4 days going up right when we broke that midline. 4 straight days of really strong price action, okay? Really green price action. And that took us up 22%, okay? But that's just 4 days. The rest of the time in this move since January 1st has been sideways. Can you guys now understand why people feel of the 31 days that have elapsed in January? So this consolidation is 11 days. This was 6 days. That's 17 days. And this was an upwards consolidation, but it was 8 days. Okay, so 11 plus 6, that's 17, plus 8, that's 20. 11 plus 6, 17 plus 8, that's 25. I just didn't want to get that wrong. 25 of 31 days sideways. That's why everybody feels like we're stuck. You know what, though? The greatest thing about this is the following. Although when you wake up in the morning or anytime you check your portfolio, the price, okay, let's write that down. 25 of 31 days sideways. Okay, so this sideways, this sideways, this sideways, right? This is since the beginning of the year, we've gone up 50%. But 25 of those days, and I don't even know what percentage that is, but it's a huge percentage, right? That's like something like I don't know. That's a huge percentage. Somebody tell me the percentage if you care to. It's like 80+%, 85% of the time, okay? All that time was sent sideways, and if you're just trading on feeling, a lot of that feeling, that emotion that traders exhibit is a direct function of time, because most of the time they're looking at their portfolio. Most of the time they're looking at what the price is doing. It's sideways, so they feel like there's no decision in this market. But that is what basic, like really beginner traders do, because the savvy traders will say, hey, hold up, I know exactly why I feel like that, because any impulse spends most of its time consolidating, and the actual move up is fast and takes very little time, right? We talked about wave 3. And when we talk about wave 3, you can talk about wave 3 on a high degree, like a cycle wave or a primary wave, right? So you can have wave 3 last years, right? We're currently in wave 3 of, Bitcoin's cycle, right? When you're talking about cycle waves, I'm just going to do this for a second just to show you guys. So when you look at Elliott wave theory and you examine a trend on a high time frame, which we do on this channel, because it's important to know, to have some idea of where you're at. But if you look at Bitcoin on the high time frame, right, I have us being in cycle wave 3. Okay, so the blue right here, that is the cycle wave 3. We've been, according to my analysis, in cycle wave 3 since 2011. Okay, and cycle wave 3, remember, one of the characteristics of wave 3 is that it's typically, not always, but typically the fastest and the most impulsive of Elliott waves. And it takes even less time sometimes than wave 1 did. But it goes, remember, 161 to 200% longer than wave 1 did. Most beginner traders, most novice traders don't know that relationship. And so for them, things go up in a straight line because they think of progression, any progression in their lives, linearly. When actually nature shows us that progression happens 3 steps forward, 2 steps back. It happens in your life if you really pay attention. 3 steps forward, 2 steps back. You're at a new job. You're learning a new skill. 3 steps forward, 2 steps back. That is the 5-3-5-3-5 Elliott wave impulse. And that's why it works, because it's derived from nature. The golden mean, the 1-6-1-8, the phi ratio. It's all, this is the extension of that. 3 steps forward, 2 steps back. Okay? And so when you know markets, because you understand and you study the natural rhythms that markets take, you're not surprised when you hit that wave 3 and it goes faster. And you weren't shaken out by wave 2. And you're not shaken out by wave 4, although trading wave 4 is a little more risky, but that's another discussion for another day. So that is my, long, but I think thought out answer as to why everybody feels like we haven't done anything. They feel, I was on daily, wasn't I? They feel like we've been stagnating when in actuality we've been up 50+% for the month. Because most of the time, 25 out of 31 days of January have been spent going sideways. But you know what? Who doesn't care about how long it takes? My portfolio. Because every time I check my portfolio, I'm like, oh, wait, I got into this position and, 3-4 weeks later, it's up a few thousand%. Real story. And that is how you play the game. That is how you stack your gains. You recognize the high time frame trend. You do not overtrade. At no point in time was I don't know about this. We're consolidating. We could go down. I'm going to sell. Okay, buy again. Okay, sell. Buy again. Sell. That's one way to do it. Highly unlikely that would ever even sniff the type of gains thus far that I have by overtrading this trend. Okay, so I'm going to talk briefly about technique, because I don't talk about that a lot. I talk mostly about technical analysis and, just reading the charts. But I'm going to talk briefly about technique, because I think we're all here, by and large, to make gains. Learning these charts, learning how to read charts so we can make gains in the market. But you can't make gains in the market, You can't make gains in the market if you're not patient and you don't play the trends. So I don't know. Sorry, I'm trying to erase these stray marks. It just bothers me. You guys know that. I'm a little OCD like that. Let me just do that. I can't talk and do that at the same time. Sorry about that. Give me 1 second. I'm almost done. Gotta clean up. Alright. Okay, so, technique. You cannot make money, and you will not make money consistently by overtrading. And most people, even some colleagues of mine, other technical analysts who may be, good. They're really good analysts, but you know what? They're bad traders in the sense that they overtrade. If they are indeed overtrading like they claim to be on their shows, right? Buying and selling and buying and selling and buying and selling. You do that in a sideways market, okay? 3 main markets. Sideways, up, or down. Either you're going sideways, up, or down, okay? Impulsive up, impulsive down on a high time frame, or you're going sideways in accumulation or distribution. Once you recognize that, okay, and anybody can recognize that, even a beginning novice trader can recognize that, you go on a high time frame and you determine, okay, what are we doing? Okay, I'm going on the weekly time frame. Okay, I see a channel here. This is sideways. This is where you can kind of trade up and down and up and down and up and down, okay? You can have fun. Not advisable, okay, in terms of technique, in terms of strategy. It's probably best to wait. Use time. I know it hurts because this is 230 some odd days. It hurts to see you buying up here and then the price goes down there. But in the scheme of things, it's nothing because this is all the same. This is the same as this in the scheme of things. But you to have that perspective, you have to zoom out and you have to kind of know what the market is likely to do. You don't know exactly 100%, but you know what it's likely to do. Okay. So, with some perspective, the wise trader accumulates during accumulation time. They don't try to trade it up or down. And if they do, they're really careful. And they're trading a little bit at a time. They're not taking too much risks. But by and large, they're building positions here. And then, when they see that this accumulation period has broken up and out, the wise trader does not trade any longer. By and large, okay? By and large, these are generalizations. The wise trader lets the trend happen for them, okay? The wise trader understands that there's going to be some consolidation. And the wise trader also understands that the moves up are going to be big and they're going to take very little time with respect to the entire trend. So instead of trying to catch the 50, 100%, 200, 300% move that happens in 48 hours, and we're going to see that, okay? We can already see that. I'm not just making this up. In a bull market, what do you see? You see these kinds of moves that in a day you do 22%, and we're not even done. The day just kind of started. There's still many hours left. That's just the beginning, my friends. You're going to see triple-digit gains, and this is just today, right? If you understand what's going on, this asset in particular has gone up 200% in the past 1, 2, 3, 4, 5, 6 weeks. Okay, that's not that much. That's not that much for us in crypto. But understand that this was leaving an accumulation range with a lot of friction, lots of buys and sells, okay? Lots of resistance, so that happened slowly. Now, less resistance, faster moves. Let the trend happen. Don't try to be, oh, I'm just going to catch the big moves and I'm going to sit out the accumulations. Let things work for you. Identify the larger move and get out of the way. That is the most clever thing that you can do as a trader. Don't try to overtrade. Don't try to guess exactly when and how this will happen. Okay? Generally speaking, if there's a volume gap, a volume gulf, and I showed this the other day. Let's go on the weekly really quickly to demonstrate this. When you see very little resistance to the left, okay? Here you can see that we don't have much of any resistance here. Okay? It was just a straight shot up. So very little resistance here. We accumulated. We should have very little resistance in going up. Okay? So that's a high time frame read. But do I know the minute, the second, the day, the hour that we're going to move? No. But I don't care. I'm in my positions. I could be asleep. Let this move happen. When it happens, it happens. And my portfolio goes up. That is what a wise trader does. You know what you don't know. And you don't try to control everything. You don't try to you don't try to make low probability reads, okay? And a low probability read is, even though we're watching the markets every day. This is a daily show. Obviously, I'm taking Saturday or Sundays off. You know, recently I took Sundays off. I'm watching the markets, but I'm not publishing anything. Yeah, except for a few tweets or maybe some posts on YouTube. But you don't overtrade everything. Just because you read every day doesn't mean you have to trade every day. I haven't made a trade for weeks because once we got out of this accumulation zone, I did all my accumulated all my positions, protect against downside, put in my stop losses. All I do, and I'm talking technique here, I don't talk about this too much. I'm talking strategy. What do? I go into my exchanges, I look at my positions, I admire them, yeah. And I look at the stop losses and I move them up a little bit behind crucial support. That's it. So whatever happens, a black swan event, I'm still not going to get shaken out. I'm talking again leverage trading. I know not everybody who listens is a leverage trader. Not everybody's a professional. A lot of you are just doing spot. This doesn't apply, but I'm just talking technique. Okay? For instance, on my spot positions, I do not have a stop loss. There's no reason to. Because my high time frame analysis is just fine. It's just, I'm going to let it work. Okay? So that's pretty much, it. I don't really see much of a bearish case. So many reasons to be bullish. We look at the chart. I mean, we can see it. All we've done is just post a strong uptrend. And in that strong uptrend, just as always, you're always going to experience some consolidation. While we consolidated, our high time frame stochastic RSI momentum indicator has reset. Okay? Don't overcomplicate things. That's really bullish. If you want to make gains, you like money, and you've been thinking of crypto, just buy it and get the hell out of the way. Don't do anything for a while. A few months. Okay? Not financial advice, but it is. Alright? The other thing I want to show you is this. Here. If you look and TradingView, and actually this is a strong buy now, or this is a buy, but it was a strong buy. You don't, okay, here you go. So you look at the technicals, it's, all of these indicators are just derivative of primary indicators, like moving averages, volume, and all that stuff. Interesting to look at. But here is another way for a beginning trader to get an understanding of what's going on. You choose your time frame, choose a high time frame, like a monthly time frame, or a weekly time frame, or a daily time frame. And you can start to see the trends. Moving averages tell you it's a strong buy. The oscillators tell you it's neutral. In summary, it's a buy. Of all of the different indicators that are used, 14 are a buy, 10 are neutral, 2 are sell. I, again, I don't advocate or recommend that people rely on indicators without the knowledge of reading price action first. Use price action first and foremost, then you can support your reads, support your ideas with some indicators. But I just wanted to show that I thought that was interesting. Okay, what's the other thing we look at when we're kind of making our reads on the crypto market? We look, of course, at Bitcoin dominance. Okay, Bitcoin dominance is a measure of Bitcoin's market cap with respect to other market caps in the cryptocurrency space. Okay, and so in a bull run, Bitcoin dominance typically goes down, and we've been expecting it to go down. We drew this bear flag some time ago on the show, and here we have an impulse, we have a consolidation, we're expecting an impulse. Okay, so for many days we kind of been stuck here. What does this tell us? It's very likely that this is distribution and we're looking for a move. Okay, so that's a read of the price action. Now let's turn on our indicators and see. On the daily time frame, it's crossed bearish and it's going down. Okay, on the weekly time frame, it's crossed bearish. Well, not yet. It's about to cross bearish, and it looks like it's about to puke. On the weekly time frame, which is a high time frame, more relative to the daily, it's completely overbought, as you can see. Okay, and it's double topped, meaning there's strong bearish divergence here. Okay, on the weekly time frame. So this indicates a very high likelihood that Bitcoin dominance will go down. And remember what that means. That means Bitcoin is going to lose. That means Bitcoin's market cap is going to be overshadowed or outperformed by other market caps. Doesn't necessarily mean Bitcoin's going down. It means specifically that Bitcoin's market cap is going to be overshadowed by other market caps, like in altcoins. And that's exactly what you expect in a bull market. Every bull market has that, needs to have that. You need to have Bitcoin dominance going down. You can backtest that. Don't take my word for it. And these altcoins have to outperform in general, in aggregate, Bitcoin. And that's exactly what you see, right? All of this corroborates with what you see in the charts. Go and look at your typical altcoins. Bitcoin's up 1%. ADA's up 4%, right? Bonk is up 4%. Doge is up 7%. And do you see that? Like, by and large, Bitcoin's getting way outperformed. And that's what you should expect in a bull market, okay? The other thing we would want to look at is not just Bitcoin dominance, but also the DXY, okay? So if you look at the DXY, we're looking for a move down, of course. Sorry, 1 second. Let me fix my screen. So DXY is the US dollar currency index. If the dollar goes down, Bitcoin goes up, risk on assets go up. We're looking for a move down. Bitcoin dominance, the DXY rather, has been in this trend, in this sideways trend for some time. Looks like it's at resistance over here. It's been going up and down, up and down, up and down. We are expecting a move down. Okay? We've been expecting a move down. And it seems as if every single time it's come up to this resistance level, it hasn't consolidated at resistance, right? Remember, I always distinguish between consolidating at resistance and rejecting. It looks like it's rejecting. 1, 2, 3. 3-wave move. So a 3-wave move up to resistance and a 3-wave move off of resistance. That's a rejection. This is resistance. Looks like the move is down. Okay, the aggregate move is down. We can see that on the high time frames, I believe, on the daily. Yeah, we're in over bot territory. I think the daily is really very nice sort of illustration of what we're talking about. You see that big wick to the upside. That signifies a strong rejection. Again, big wick to the upside signifies strong rejection. Looking at candlesticks. And then on the weekly, it's just bottomed out. It's been bottomed out. It's probably going to stay there for a while. It just looks tired. Okay? So that's what we got with the DXY. But again, you do your high time frame analysis, and that's all you should need to do. As beginning speculators, chartists, technicians, you don't need to get into the weeds on the small time frames. The lower the time frame, the more volatile the moves. Okay? You don't need to do all that. Just look at the high time frame and look for basic support and resistance, make your reads, follow through, and ride the trend. And by riding the trend, you just wait and let it play out. Nothing else to do. Okay? And most people are overthinking it. Most people not only overthinking it, it's just they don't know what to believe, right? Because they have no base understanding of what a bullish trend looks like, what a bear trend, what a trend is even. So anything anybody says could be correct to them. And what do people do when they look for if somebody is believable or trustworthy? Is how many other people believe what they're saying? How big is their following? Do you see? And that's the danger, especially when you're getting into speculation, because there's a lot of people with big followings got no clue what they're talking about. But you wouldn't know if you didn't have a basic understanding, right? So that's the catch. That is the paradox. You have to know to know. You have to know a little bit to be discerning. So that's why do your own research is so big. It's so important. You have to do your own research so you can exercise discernment and make better calls as to what you consume in terms of your diet for technical analysis, for chart analysis. Lots of good channels out there, lots of bad channels out there, but you got to decide. You got to decide. You got to figure it out for yourselves. All right, so that's Bitcoin. Now what we can do is just look at some alts. Let's have some fun. Look at some alts, see what's going on in the market. And let's look at XLM as well for Kongsha. So let's go. So let's go into the 4-hourly. I want to go into the 4-hourly. And so, yeah, just to cap off yesterday. Remember, yesterday we were talking about what this may be. And I was saying it's a consolidation of some sort. I incorrectly labeled this as a WXY. And then a consolidation reversal. And then on stream, this happened. And I was like, ooh, I changed it. And, maybe a novice trader would be like, this guy doesn't know what he's talking about. And that's fine. But how do I say this? It doesn't matter how you categorize this as long as you categorize it properly. By that I mean, as long as you know it's an intrawave consolidation, and as long as you know it's a flat correction, that's all you need. Whether it's a WXY, WXYXZ, it doesn't matter. It just means it's intra-wave. We're going to go sideways a bit and then eventually continue the trend. Okay, that's the big 200 IQ read. That's what you do. That's how you play it. Okay, but for learning purposes, I do believe that this is a WX Y X Z. Okay, a 333 complex correction, and we did our consolidation reversal yesterday, and we're working up and out of that. Okay, so that's what I believe, and that's what it looks like, at least thus far. Okay, Cardano. Same deal. Here, it does look like you put in a flat correction, but instead of a 333, it looks like you put in a simple ABC, right? Nice ABC flat correction. And you started going into impulse right here. So I think this is a simple wave 1, wave 2. Maybe wave 1, wave 2, or maybe you're in wave 4. I don't really know. But it looks like you started going impulsive again. And that big green candle right here on the 4-hourly time frame looks like part and parcel of a wave 3. Okay, so it looks like you're going impulsive again, which is the important thing. Okay, so that looks really nice. You're pretty much at resistance and consolidating at resistance. Okay, and we all know when you're consolidating at resistance, that's very bullish. You're bound to break it. You're going to go sideways a little bit and eventually break that resistance. Okay, and that resistance has been up or in for a few days now. You see that? But we look like we're poised to break it. So that's Cardano on a high time frame, looking really good. And again, remember, once that happens, once you break that resistance, you got nothing. There's nothing, right? Look, let's go on the weekly. Let me really illustrate this. There's nothing up there. Do you see this? This is your previous high. You're back up here. So not only is this the bottom of this channel right here. So this is obviously some sort of sticky point, right? It's resistance. It was support here, and now it's resistance. But it's also the previous top here. Do you see that? So you had a previous top here, and that's a previous bottom. We're consolidating at this resistance level. Once we break that, there's pretty much nothing. Do you understand how you can get triple-digit daily gains once we break these resistances? And the high IQ move, the really good advanced trader move, is not to care when you put that move in, when it breaks. If it's a double 3 or triple 3, you don't care. You just recognize on a high time frame that you just broke a 500-day resistance, turned it into support. Okay, as you can see, you don't just break resistances, but you have to turn it into support, right? Break, retest, break, retest, and now whatever you do, however you matriculate, it's free. You're going into price discovery soon. I don't know if people understand what this means. And the people who wait until we start putting out those 300% daily gains, will they be late? I don't know. Maybe not. If they hope to get in on leverage, it's going to be really tricky because it gets so volatile. Exchanges close. I will repeat, for those of you who have not entered a bull market in crypto, your exchanges will close. A lot of exchanges shut down. Trying to get orders in, there is no liquidity. You literally can't buy. There's nothing left because quite literally the supply has been exhausted, so it's being marked up crazy. And then once you get to an accumulation or some sort of intra-wave correction, it's hard to read because it's so volatile. And sometimes it goes down. It'll go up 100%, go down 40%. Do you see? So it gets really volatile. It's still kind of early, but we'll see. So that's Cardano. let's stay on the daily, actually. I like this. So Algorand, you broke and retested a really high degree of resistance, and there's nothing at all bearish about this. And look at this, a very nice leading diagonal, looks like. I gotta zoom in for my pen to work better. You see that right there? It's just, you're matriculating. You're clearly putting in, this is a sign of strength. You're not only consolidating, but you're consolidating up and to the right. You know, these are bullish consolidations. These are running flat corrections. Really skewed running flat corrections, by the way. Okay, once this breaks, it's sayonara. Okay, Bonk, one of my favorite meme coins for this bull market. Okay, nobody's talking about it now because people only talk about this kind of stuff once it puts in its triple-digit gains. You know, this is one of those that's going to do repeated triple-digit % gains daily. Okay, it's such a low market cap, super volatile. I think it's like 2,500 level, or it's ranked 2,500 of all altcoins in crypto, in coin market cap rather. So yeah, you just know it's a really small market cap, really volatile. I'm excited for this one to go. It's up a bit today, but you know, this is nothing compared to what it's going to do. Dant, I mean, just nothing bearish about this, guys. Just basic read of the charts. You put in your support and resistances, right? You broke resistance, retested as support, and all you've been doing is consolidating, bullish consolidation, right? These are what we call running flats, okay? And that's also basic Elliott wave analysis, a running flat. When you learn your corrective waves, you learn about your ABC flat corrections, you learn about your B wave overthrows. What's that called? Oh man, I forget the terminology, but basically when the B wave comes and breaks the plane of the A wave, and then the C wave doesn't come to the origination point of the A wave. That's what is a running flat. It's just there's so much buying pressure that the price just can't come back down to those levels, and your corrective sequence is complete, and it's skewed up and to the right. So yeah, that's essentially what you're seeing. So yeah, it looks really good for continuation. Again, you don't know I think the better I get, the more comfortable I am not knowing, because I know what I don't know, and I can compartmentalize it and play with what I don't know. And I don't know exactly what kind of triple three or double three or complex correction is being put in, or whatever flat correction is being put in there, but I can just zoom out and recognize it as a bullish consolidation, running flat, whatever, and I just know very simply I broke important resistance, retested it as support, and then I'm consolidating up and to the right. That's telltale for me. Like, get in and get out of the way, okay? Because the fireworks are starting. And again, if I want confirmation or some support in my read and my thesis, my trading thesis, I turn on a good indicator, a simple, nice, I like simple, stochastic RSI momentum indicator on a high time frame, and that shows me while you're going up and consolidating, right, this momentum's coming back down. Your momentum resets as you consolidate. It shows that the trend is strong, okay? When you're in a sideways market and you go up, momentum goes up. And you go down, momentum goes down. That's quintessential sideways market. When you're in an up market or a down market, but let's say just up market, you go up and you're consolidating, so you're kind of chopping, your momentum goes down. That is one of the biggest signals of a strong impulsive market, up impulsive market. And the same exact is true for a strong impulsive market to the downside. Does that make sense? I hope that's not like, I that is super useful to me. When I see that, I get so excited because I'm like, okay, my indicators are telling me what my price action reads are telling me. Like, we're on the same page. Also, when you see something like this, do you see this? Even on your momentum indicators, you can see patterns. This is a strong pattern of consolidation. And you see that basically you're bottoming out. Instead of going down, you're so impulsive, you're so bullish that even the momentum is coiling up. Not only is the price action coiling up, but the momentum is coiling up. Okay? The more you read, the more you become literate, the more you follow these trends on the chart, the more fluent you become at spying these relationships and these patterns and making sense of them. And I think the most important thing, I was thinking about this. The best traders, they read the cause and they trade for the effect. The worst traders and the most novice wait for the effect. And I think the biggest lie that is told in trading, and when I was learning, I always heard this. Don't make predictions. Good traders don't make predictions. We don't make predictions. We wait for the market to tell us what to do. Yes and no. Insofar as the market will tell you the effect before the effect. Okay? If you see clouds, you look out the window, you see clouds, and the air is getting thick, and you hear thunder, you know what comes next. Do you have to wait for the rain before heading back home or looking for shelter? No. You know what's coming next. That's exactly the same thing when you're charting. If you see bullish consolidation, not only in your momentum indicator, but also in your price action, you know what comes next. Okay? And when it comes, you just enjoy it because you're trading for it, right? But if you're really, really novice, this means nothing to you. This could go up, could go down, and you'll wait, and you can't even catch that. I guarantee you can't catch that. If you guys who've never been in a proper crypto bull market don't understand just how volatile it can get, just wait. You won't even if you want to catch it, I guarantee you try to market by these trends, you won't be able to do it. There's no liquidity, and these exchanges are down. And when you do, your buys are all over the place. You got sloppy entries left and right. All right, let's keep going. So Dogecoin. Here again, you hit some really important resistance. You broke it, retested it as support. That's all you're looking for. All this all breaks down, no matter how fancy we can get, counting, complex Elliott waves and all that stuff and leading diagonals. It all comes back down to support and resistance. The more complex you make it, the more complicated you make it, the less you understand, I believe. Because even though it can get really complex and intricate, when you step back, it should be really simple. Either up, down, or sideways, yeah? And essentially what we're doing is we're leaving the sideways to go up, in a nutshell, right? And if you go on a really high time frame, you'll see that. And all you did here was support and resistance, break important resistance, turn it into support with this consolidation, and that's it. Remember, these are 250 to 300 day resistances that you just broke. It's not a little resistance. These are 400 to 500 day resistances that are broken, retested. Not a small deal. Okay, Ethereum, same thing. 230 day resistance, broken to the upside, retested as support in this flat correction. What do you expect comes next? Even if you don't know anything about that, look at your momentum indicator completely bottomed out as you go sideways. That's bullish divergence, okay? Because remember, in a regular sideways, no momentum, no impulse market, right? What we've been experiencing for the past 230 days, as you go, if the momentum is showing you downside, you also show downside in price. But now, the upside momentum is so strong and favored that you can go down and reset that momentum indicator in sideways price action. It's so clear. The more you look at this, you should be able to prove it to yourself and put like so much you should be able to make big bets to make those asymmetric wins. Like, you should be able to put down a little and bet a lot based off of your skills in reading these markets. That's why you spend time learning this stuff. Because once you're able to read them, it's literally the same as if you go outside and you feel a drop of a raindrop. The clouds are gray, the air is thick, it smells like, the rain is coming. You don't need to wait for the thunder shower. It's that clear and obvious to you. And so, yeah, if people say, well, no, I think it's going to be a nice and sunny day, you think they're lying. Because you're like, how can you not see this, right? Litecoin, same thing. Broke important resistance, retested as support. Important resistance, retested as support. Consolidation, goodbye. Okay? You don't have to wait until goodbye to get excited. Here for RSR, we're about to break this important resistance. You can see that we consolidated at resistance, okay? Both this 400-day resistance and this 250-day resistance consolidated at. If we're going to reject, this is exactly where you're going to reject, at this double resistance, okay? Not rejecting at this double resistance shows an immense amount of strength. Because understand, these resistances are really high time frame. Again, 400 to 500 days, this solid line. This dotted line is 200 to 300 days. Right? It's about 240, 250 days. Okay? Consolidating at resistance. That's going to break to the upside here. Retest this as support. And goodbye. Okay? It's so simple. It's so straightforward. It's so obvious. I would be lying if I told you, well, I'm a responsible trader because I look at both sides. No, that just means you don't know how to read. In certain cases, on smaller time frames, in sideways markets, yes. I understand that whole idea of saying, I'm looking at both sides, right? It can consolidate, it can keep consolidating, we can put another. There's no trend established. You're sideways. You're just going up and down and up and down and up and down, especially on a small time frame. If you zoom out in a large time frame, the trend's established. You're breaking high time frame resistances, turning into support. If you're saying up or down, you just don't know how to read, and that's okay. High time frame resistance tested as support. High time frame resistance consolidated at, right? Not rejected from, but consolidated at. Big difference. Breaking it, retesting it, and goodbye. That's SHIB. And SHIB. Oh, I feel like it hasn't done anything. It's up 66%. And again, right, this is what we read on the Bitcoin dominance chart. Bitcoin's up 50% in counting. Shiba Inu is up 66% in counting, right, for the month. And it has yet to even break its bear market accumulation zone, okay? Look at your momentum indicator. It's telling you to buy, right? Let's say I was telling my mother how to read charts, okay? And it's not going to work for every chart. But let's say I picked assets that did have enough price history where on the monthly time frame, there was, data with the stochastic RSI. I would say, Mom, every time these two lines get in this region, you buy. Every time they get into this region, you sell. That's it. If I have 5 minutes to teach my mom how to do technical analysis and do investing, responsible investing using charts, that's all I would tell her. That lasted less than a minute. She'd say, okay, son, thank you. I will, from here on out, only buy when the lines get here, and I will sell when the lines get there. That's it. That's all you got to do, right? Again, provided your chart has enough data on it for that to mean something. Because you can't use every indicator on every chart. Understand that, your asset that just came out last month has such a dearth of information that on a high time frame, there's nothing there. There's no data. There's no trend, right? I'm looking at Bonk right now. Came out a couple months back. There's nothing. So you can't do that for everything. You need enough information, okay? Just for those of you just getting started, that there is you have to look at whatever asset you're looking at and make sure you have enough data to use some of these indicators. A lot of people just use every indicator indiscriminately on every chart. It doesn't work that way. Okay. On synthetics, what are you doing? Oh, I'm still on the weekly time frame, sorry. What did you do? You just broke important resistance, retested it as support. The most bullish thing, if I had to say, what's the most bullish thing about these crypto charts? The fact that we're breaking high time frame resistance and turning it into support. Period. There's no ifs and buts about it. Don't have to talk about the DXY. Don't have to talk about Bitcoin dominance. Don't have to talk about any Elliott wave, this or that. Support and resistance. High time frame resistance, a 500-day resistance, flipped into support. 250-day resistance, broken, flipped into support. That's all you should need if you keep it simple. If you have any questions after that, you don't understand just how powerful that is. Period. Tron. Broken high time frame resistance. This is 600 days. The hypotenuse of this massive triangle. If you follow this work, I've shown it to you on a high time frame. It's a massive triangle. Let's just show it again. As you can see, this has lasted for a long time, okay? Is it even 600? Let's see. 637 days, okay? 637 days of resistance, give or take, because it's on the weekly time frame that we're measuring that, okay? Broken to the upside, okay? Think about that. Like, you waited 637 days. Understand, and a lot of people don't get this, what makes the price go up, technically speaking. We talked about cause and effect. If you're into cause and effect trading or ways of looking at the market, you probably are into Wyckoff analysis. Huge. This is how he viewed markets. This is how he analyzed markets. Huge cause and effect guy. In any case, this is the cause, and the effect is that. Okay, I don't have enough space to really show the proper effect. But what do you think happens after you go sideways and accumulate for 600 days? What do you think happens? People who are bearish, and a lot of people are bearish on this. I've heard big accounts, let's just say BitBoy. BitBoy's good and bad. Great for a lot of things, shitty for a lot of things. But, I watch it anyway. It's a huge channel. I think he does a great job with entertainment and kind of covering a breadth of topics in crypto or crypto adjacent. And so it's cool. But I don't go to BitBoy for technical analysis or understanding why something moves. Okay, no disrespect, no offense. But I really enjoy a lot of the content, like the around the blockchain, all that stuff. Really great job. And in any case, he said maybe last month or 2 months ago, Tron's moving. Why would it move? Isn't that a dead coin? It shouldn't move. Guys, if those coins that were irrelevant from previous markets shouldn't be moving, because they're irrelevant and they're not new anymore and nobody's investing in them. That illustrates a misunderstanding of markets. Okay? When you're looking at a market like this, and this is a great example, that has consolidated in a very clear pattern for 600 days, you understand that this is the cause. This is the cloud. These are the clouds. This is the thunder. This is the heavy air that you feel. And you know that the storm is coming. You don't need to ask. And how do you know this? Because you can say, well, Dean, there's such a thing as a triangle that breaks down. Yes, there are patterns that go both ways. But how do you know it's going up? Quite simply, because the 600-day resistance and retested it as support right there. So this is a blind trade. You can do this with your eyes closed and seem like a genius, because this is going to go so high and so far, and it has to. Why do you know that? Because for 600 days it accumulated. Everybody and their mother had an opportunity to buy and create buying pressure. See, guys, when you study this stuff, and I mean really study, not just like look at a TikTok or two, but when you seriously study technical analysis, you will look like a genius, but it's not that complicated. People who are not invested in Tron, people who are not sort of in disbelief or incredulous as to that the fact that this can do anything and make any moves in a bull market, don't understand markets. Accumulation leads to markup. Period. End of story. That's the why. That's the cause. Not the FOMC. Not the anything else. Everything's related. Yes, I understand that. But if you're just to look at this chart on a high time frame, you see a massive bull flag. An absolutely ginormous bull flag that's lasted the entire life cycle of this asset. Impulse consolidation leads to impulse. That's trading 101. It's all so simple. The novice, inexperienced trader goes on the smaller time frames, on the 13-minute time frame or whatever strange time frame, and says, you know what? I see some divergence here and some divergence there, and then my, trade finder 2000 is saying that, it could go up or down, but it's showing some, on the 14-minute chart, it's showing it could go up, and on the 19-minute chart, it's saying it could go down. This is what inexperienced traders do, and there's tons of that throughout social media. Do your due diligence. Do yourself a favor. Learn how to read markets. Zoom out. Make life-changing money. Rinse and repeat. So that's Tron. Okay, XRP. Okay, whether we have a favorable ruling or not, the charts are telling us that it is likely to break up and out. Okay? Obviously, if a ruling comes out on XRP and it's negative and it becomes a commodity or like a security, I believe. I don't know. Maybe I'm wrong in saying that. The ruling's unfavorable. Something may happen and break this chart, in which case this retest gets invalidated. But you'll see it on the charts, okay? If the ruling truly is unfavorable to the extent that it changes the fundamental value of the asset. All things being equal, if things progress, if all things stay the same, or the ruling is neutral or does nothing to change the underlying value, the chart is telling you that this has been accumulating since May of 2021 in this trend and displaying bullish accumulation. And the chart is also telling you that it wants to put in this effect. It wants to put in that move because as a result of that accumulation, it's decided, it's taken a side. It's broken up and retested and now wants to break up more. There's nothing more to it, guys. It doesn't get that complicated, right? You don't have to be a genius. You don't have to, have all of these overpriced indicators and join these trading groups and Discord this and Discord that. Just study. There's books about Elliott wave and Gann analysis and Dow theory and Wyckoff analysis. Teach yourself with YouTube videos and other traders. Learn what to do, what not to do. Then trade a little bit. And you'll get it. It's not that hard. Zilliqa. This high time frame trend broken to the upside, retested as support. It goes. Okay, we've been waiting for a bit, right? I've been saying this for quite some time. And we've been chopping up here. But I'm not concerned because we've been chopping up above resistance. Basically trading or retesting or flipping resistance into support. Yeah. So we can chop up here indefinitely. It doesn't matter. Eventually, what's going to happen is we're going to break up. And that's what I'm going to take advantage of. Okay, and once we start going, we can talk about when to take profits, but it's not anytime soon. I'll say that much. Okay, so Akanksha wanted to look at VeChain. VeChain, you can look at it in the same way. Again, you don't have to be a genius. You don't have to have all kinds of clever insights on a small time frame. Just zoom out. You can see a clear trend. Okay, and the trend was that there's a channel, a downwards sloping channel, and some price action. Okay, how do you know it's a channel? It's a veritable channel because you're setting a bottom and a top regularly. So you're regularly hitting the top, regularly hitting the bottom. So with a high degree of confidence, you can draw a channel. You can channel the price action. Okay. If you channel this price action, you can see that you've been moving up and out, right? You're clearly targeting the top of the channel. And what you're looking to do, and what you're likely to do, based off of the rest of the cryptocurrency market, is break up and down, right? Retest the top as resistance, as support. Break the resistance and retest it as support. The question was posed between VeChain and XLM, I believe, Stellar Lumens, what has the greater upside potential, okay, in terms of return on investment? Okay, that's a common question we ask ourselves, right, when we're making investments. We want the biggest bang for our buck. If I'm going to put a certain amount of money in one, I want my money to go further. Okay. Generally speaking, that's tough to answer, but sometimes you have enough data to be able to do that. So here we have what looks to be some sort of impulse, some sort of 5-wave sequence. I think we have an extended or expanded wave 5. So it's like wave 1, wave 2, wave 3, wave 4, and then a wave 5 extension. Okay, that's just my read. Okay, and so you have a wave 5 extension here, and it's likely that you have a completed correction of this impulse right here. Okay, and one of the things that gives me a lot of confidence to say that this is a completed correction is that the time it took for us to go up is about 400 days, okay? And the time it's taken us to come down is about 400 days, okay? So why am I stopping there, and why didn't I stop at the end of the channel? I'm sure you're asking. Because for me, I'm looking at this as being the 3-wave move, okay? I'm seeing an A, B, C flat correction in which you have a completed 1, 2, 3, 4, 5 waves up, 3 waves down. That's the 3 waves down I'm seeing. So again, A, B, C. In this case, instead of a regular 5-wave move impulse for C, you have what's called a zigzag. Okay, a zigzag, which is kind of I guess you would also call it an ABC correction, but it's an impulse nonetheless. It is tricky, but I think that's what you got here. So that is your completed 3-wave move. Okay, and so what you have here now is sideways accumulation. Right? When we talk about the 3 phases of the market, up, down, or sideways, this would constitute the sideways portion of the market where, okay, you just dumped down a lot. Now you have to accumulate and absorb all of that supply before you continue your trend. So that's all this is. So the past 200 to 300 days, that's what you got here. Okay, so this, if you're really careful and you read markets and you're savvy, you differentiate this correction from this accumulation. Okay, although I put all of this in the same channel just for support and resistance purposes. Does that make sense? Like 2 different phases of the market, both corrective, but still in terms of support and resistance for, what I'm looking at, all of this is channeled. It's in the same contiguous sort of channel. Okay? So, in terms of projecting the price to the upside, I would simply do this. Given that I have parity in the 5 waves here and the 3 waves there, I think there's a high degree of probability you can say this is a wave 1 and wave 2 situation. Okay? Right? Wave 2 comes between the 382 and the 618 Fibonacci retracement level of the prevailing 5-wave sequence. Okay, we got that. And we obviously got parity in time. 400 days, 400 days. Okay? That gives me enough confidence to say I'm going to take my Fibonacci extension tool from the bottom of these 5 waves to the top, retracement of the 3, and here is where your skills in distinguishing this from this come in, because you have to pull down all the way to the orthodox low of the move. That's the end of your corrective move right there. Not here, there. Okay? That May 12th date also was where a lot of altcoins had their orthodox lows. In any case, I would then project wave 3. And from basic Elliott wave theory, wave 3 typically projects between the 1618 and the 2 Fibonacci extension of wave 1 retracement of wave 2. Not always, but just, by and large degree of probability. So we can get an extension. We can even get a truncation. We can get wave 3 come down to the 1 Fibonacci extension. That is uncommon, okay? So more often than not, it's going to fall here. So I would expect, given that analysis, that our bull run yields something between 96 and 690 for VeChain. Okay? That's just what the charts say. Okay? So that's what? A 4,000 to... God, that's a lot. 28,000%. Or, yeah. 4,000 to 28,000. 4,000 to 28,000. X, fuck. Is that true? Yeah. Yeah, these are just ridiculous numbers. 4,000 to 28,000. Yeah. I mean, that's kind of crazy, but that's what the charts show. I'm not going to judge it. 4,000 to 28,000. Okay. Now, we want to look at XLM. Not every asset has enough data for us to make projections, but we're going to look and see if we can't make a projection. And I've talked about this a lot, This is the only way to make projections using Elliott wave is to have either wave A and B and project wave C, or have waves 1 and 2 and project wave 3. Obviously, you can also make projections on wave 5 with waves 1 through 3 and retracement on wave 4. But, yeah, that's not to get into the weeds. Okay, XLM we probably already have. Let's see. XLM. So let's do the same thing and see if we have enough data. Okay, first thing we notice is here you have what seems to be a corrective wave. Okay, it's not, there's no impulse here. It's unlikely that you have an impulse because, you know, off the bat, if you take your Fibonacci retracement tool from the bottom of this wave to the top, and let's just say the top is here, I'm going to guess, right? That's the orthodox high, and then you get an initial break of structure. That's a secondary B wave. Okay, so I'm going to take it from there. It's close. Okay, let's look more into this. Because if you take your Fibonacci retracement tool, this is still within, there's a possibility that this is a retracement of that because it respects the 0618. It's dipped below, but it hasn't breached this level. Okay, and for me, just in my experience, if it goes below the 50% level of between the 618 and 786, then to me that's a breach. But anywhere beyond or before this, the 50% level is fair game, and that's just a wick. That does exhibit some weakness, though. That does exhibit weakness. Okay. So what I'm gonna do is I'm gonna do what I did before, because we know waves 1 and 2 typically have parity in time. So I'm going to look and see if I have some parity in time. So about 336 days up. Let's see. I don't know. Let me pull this again because I'm rethinking my orthodox high. I'm gonna say it's here. Yeah, I'm gonna say it's here. Something like that. Okay, let's just put it from there. I'm more comfortable with that point. Okay, so about 400 days up, and that is consistent with what we're seeing throughout the market, right? 400 days up, and I would take... Yeah. It's... Yeah, I don't know. What am I looking at now? I know I'm being silent. It's so I'm looking for the end of this three-wave move, okay? If the end is here, because you got a big bounce there, then that's 400 days up, 400 days down. We could do kind of the same thing we did with VET, okay? But I do not believe that all of this is a contiguous consolidation reversal pattern. I actually think that you got this as a wave 4 and you lost this level 1, 2, 3. Yeah, I think that this is a wave 4 and then you had a wave 5. Okay? So to me, that says that the end of the trend is actually here. So if I take, let's see. Yeah, 574 days and 406 days. Too much of a discrepancy for me to say that the relationship between these two is purely impulsive. I think, if anything, you're dealing with a zigzag. you're dealing with a zigzag. So these are corrective waves, okay? That being said, you can still, with wave A and wave B, project wave C. It's not as precise, right? Because typically wave C can target between the 1 and the 1, 2, 3, 6 Fibonacci extension. But, it varies. So let's just say, let's just try that. Let's try that, okay? 1 to 1, 2, 3, 6. So let's just take this as wave A. And this is wave B. And target between the 1 and 1, 2, 3, 6 for wave C. In which case, that would be your wave 1. Does that make sense? So you would essentially do something like this. And I don't hate that. I think that is very nice in terms of basic support and resistance. You're leaving, I really like that actually. You're leaving corrective price action in XLM into pure impulse, and the end of that pure impulse is going to break this resistance. Remember, how do you make a trend? You just need 2 data points, okay? At least. And that's a trend. There is a resistance at this point. You're going to come here, probably break that, and wick above it, and then start your wave 2. So I would say, gun to my head, if I had to make a determination, what's going to outperform what in this next bull market between XLM and VET? It's going to be VET. For the simple fact that from my analysis, XLM is going to print a wave 1, okay? And VET is going to print a wave 3. And typically we know wave 3 greatly outperforms wave 1. Typically, okay? Not always, but typically. And based off the analysis and this trend line, which I think is in play, and the fact that this is a wave A and this is likely a wave A and wave B zigzag formation, C is going to come and stop between $2 and $4.30 for XLM, Stellar Lumens. Okay, so in that case, you're getting at most a 45x. Okay, so I wouldn't be surprised if XLM at most did a 45x, but you saw the projection for VET. It's not even in the same category. So that's my answer. I don't know what will happen, but just based off my analysis, I would do VET before XLM. I hope that helps. All right, let's get back into it in terms of our watch list. And you can already see there's some bigger movers, like Cardano starting to move a little bit. It's right about to break that massive resistance, yeah, that we're looking at. It's right on the neckline. Dogecoin is moving, right? Obviously, DYDX is moving. It's still moving. You're going to see a lot more big movers. But, guys, we saw this before. So, it's not about taking a trade now or, looking for a target. So many people talking about 25K and stuff like that. Like, just buy and go away. Don't kid yourselves. People waiting for 25K and looking to take profit are literally shooting themselves in the foot. Because there is no resistance there, and we looked at it. So I'm not going to go back into it. Okay, what were we looking at? We're on VET, yeah? Now let's move on with Theta. So Theta is looking to it's looking to attack the top resistance of this accumulation zone, okay? And retest it, okay? but it's consolidating at resistance. Very nice, very bullish. So yeah, just in going up in price, it's going down in momentum, which is super bullish, right? Your consolidations are bullish. You're consolidating up and to the right. There's nothing more bullish. Yeah. Telcoin. This is a very nice. Is this a wave 1, wave 2 situation? This is a potential wave 1, wave 2 situation. Just looks like, time it took for wave 1 is the same time it took for wave 2. Expect a big wave 3. Okay. And in that wave 3, obviously, you're going to have a test, a breaking and retesting of that high time frame resistance as support. Matic. Look at that. You've consolidated on top of your high time frame resistance, right? This box where you were sideways for the entire bear market accumulation. Now you're on top of it, consolidating, and there's nothing. We looked at this the other day. There's no resistance on top. If you go to sleep and wake up and things are up 500%, do not be shocked. Like I said, if you go outside, you look out your window, you see a bunch of clouds, you hear some thunder, you smell the smell of rain, and 5 minutes later, it's a downpour. Don't be shocked. Okay? DYDX has already broken out and expect it to continue. Again, there's nothing here. In terms of resistance, there's little to nothing here. There is no resistance. These assets, like DYDX, they're fresh out of production. They've just started trading. This is the extent of their trading history. You have no previous resistances. You're going straight into no man's land, and then eventually price discovery once you break the last high right here. Harmony 1 has been consolidating so beautifully in a nice 45 degree. So if you guys study Gann, he's big on degrees, okay? Meaning, and this is something I learned from Gann, if you have an uptrend and it's like this, it's pitched, so 45 degrees is like your, 45 degrees is like your, that's like your mean, okay? Any uptrend that's going up 45 degrees has staying power because it's a great balance between going up and going sideways. So you can actually go up sustainably on a 45 degree angle. If you're pitched any more acutely than 45 degrees, you have to come down at some point in time before you resume, okay? Because there's just not enough fuel to go up in such an explosive parabolic way without frequent big drops and continuations. You see what I mean? Now, if you're anywhere below 45 degrees, you're likely not to continue and you're probably going to be corrective. So he looked at angles, and so that's kind of one of the things I took away from my brief cursory study of Gann analysis. But here you can see a nice 45 degree matriculation of the price. So super sustainable. There's no retracement necessary, right? A lot of people are telling you, look, we're waiting for a big retracement. You're going to wait forever. It's never going to come because this is purely sustainable and your momentum is showing you that. Your momentum is going down as your price is going up. Guys, if you're getting value, please like, share, and subscribe. I'm not hiding anything. I'm not selling anything. Not that there's anything wrong with selling anything. I just don't need to, I get all my money from trading the markets. And I'm taking everything I've ever learned, and I'm saying everything. I'm not hiding anything. I don't have to keep an edge. I'm not afraid of anybody out trading me. Okay. So MOVR, Moon River, breaking high time frame resistance, turning it into support, looking for continuation. Very nice. Self key. It's still waiting to... It's still matriculating up, okay? Big move coming. How do I know? It's very likely based off of this inverse head and shoulders pattern. You broke up, you come back, retest, and you continue. Okay? And that is it. Guys, I hope that was helpful. I hope that was useful. Like, share, and subscribe if you haven't. And yeah. Akanksha says Ada's also putting in wave 3. Let's have a quick look at Cardano. Is it? I think so. Yeah, I think I've looked at this and I talked about it. Yeah, that's how I have it marked up. Yeah, I have that marked up, and that's what I was telling. I was one of my friends, one of my high school friends, asked me, "Oh, I'm looking to get into crypto. Do you have any recommendations?" And I said, "Well, you know, if I had to say, you know, you can get Bitcoin and Ethereum, all that stuff, but if you have to go for an altcoin, a serious altcoin that's fundamentally sound, really, really solid, really great, reputable project, go with Cardano." And I'll tell you why. Because their upside for that, with respect to Bitcoin and Ethereum, is much higher. Because on the high time frames, it is indeed looking to print a wave 3. And we can see this. If you go, looks as if you put in about 400 days, a little more than 400 days on the way up. And about 400, let's see, the end of this trend, that's tricky. The end of this trend was probably, this is tricky. And I did have this issue before. I did label this. I have this labeled clearly as wave 1, wave 2. But I'm still kind of on the fence about this. Because of this correction right here. Looks like an ABC correction. Where did it end? It looks like it ended here. And I thought that for the longest time. But then we kept going down. And to be honest, if you look at this as an initial break of structure, so this A wave, you've come down way beyond the phi ratio for this to be a viable B wave. Okay, I'm not going to explain too much of that right now because it's towards the end of the stream, but it leads me to believe, in short, that this was a wave 4, and then here's your last wave. Probably somewhere here. I don't know. I want to say, if I'm really being honest, I want to say this is more like what we see in XLM. I think Cardano is more like what we see in XLM. I would not be surprised if this was more of an A, B, C situation. If I really have to be honest, and I would love it to be a wave 3, but if I want to be honest, I would say this looks more like a zigzag for 2 reasons. One, because the bottom seems to be okay. It's definitely within 382, and yeah. Let's see. You're barely touching your 0.5. Okay. I've gone so back and forth on this so many times. Depending on how you pull these 5 waves up, you're still not touching the 0.5. And why is that relevant? Because a zigzag retraces at minimum to the 0.5, at maximum to the 618. And here, even if I'm generous on this pull, the way I pulled this retracement level, I don't touch the 0.5 Fibonacci retracement level, which leads me to believe that's why I put in the wave 1, wave 2, wave 3, wave 4. Okay, I remember now. Okay, I was saying, okay, look, I haven't touched point 0.5, so it must be an Elliott wave sequence. It's a complicated one that's not super easy to read, but just the retracement levels fit. Okay, it's just the timing is tough because I count, about 427 days up. And it doesn't have to be exact, right? It just has to be comparable. And like 500 days down, something like that. I don't know. I guess it's okay. I just don't know what to make of this progression down here still. I messed up an entry or two thinking that this was the bottom. But, this may very well be a wave 4, and then you come down for wave 5, and then you pull a small accumulation channel down there somewhere, which you could probably see on a smaller time frame. So this was a tough read. I'm not gonna lie, this was a tough read. I'm in this position and it's comfortable and everything like that, but this position was tough to establish. I made a nice leveraged position, and it took a few tries, a couple tries, not a few, a couple tries, and it hurt to lose. But it looks good now. Yeah, it's tough. It's tough to see where does the accumulation, consolidation, reversal channel start, because this was distributive. This is a wave 4. I'm convinced, because you broke down quite substantially from that level right here. You broke down, and I think this was an impulse. I think your impulse was here. I think that's it. Right here. That was a concerted wave 5. I think that's it right here. So that's your initial break of structure for your sideways consolidation reversal. And then you put in an A wave, something like this. A B wave, somewhere there. A wave, B wave, a pivot. Yeah. So I think it was October. Yep, I remember. October 13th. So I would say if you wanted to measure it. So yeah, I this was tough to read as it was forming. This was not straightforward. Very messy. 432, and then let's pull that to October 13th. $512. It's close enough. Yeah, I like it. I like it being a wave 1, wave 2, wave 3, and I agree with you, Akanksha, for two reasons. One, because we don't touch the 0.5 Fibonacci retracement level, and we know a B wave of a ABC zigzag minimally retraces to the 0.5 Fibonacci retracement level. You can see even on the most generous pull, we do not touch the 0.5 Fibonacci retracement level. And two, the timing works out where both waves 1 and 2 are comparable in time and in price. So in time, rather. So 432 days up, and then 500 and like dusting. 500 and some 17. What is it? 512 days down. Good enough for me. So yeah, I would say that ADA is a really nice asset because it's so fundamentally sound, and it's put in these. The cause here is so, it's so strong. 500 days down, 400 to 500 days down, right? This downtrend's 488 days. You broke it, you retested it. That's going to yield massive gains to the upside in a very fundamentally sound project that's likely to expand and already has great applications throughout the world, right? Not something that you expect to be hacked, and it's really well decentralized. And so I would pull my use my orthodox low here. I would target the target of wave 3 between 1618 and 2, as I have it here, right? Between $906 and $5,800. So yeah, I'm excited about Cardano. And once again, those are great gains for a serious project. You know, those are amazing gains. You don't always have to scrape the bottom of a barrel, you know, of really low market cap projects to get outsized asymmetric gains in crypto. This is a great example of that. So yeah, all right, that's it, guys. Hope that was helpful. Hope that was useful. Don't forget to like, share, and subscribe. And I hope you're well positioned. Zoom out, go long, go away. You know, don't overthink it. Don't overstress it. Let the market do its consolidations, its slight pullbacks, right? We've been in a sideways channel for 11 days, okay? And, you know, novice, bad, let's just say it, you know, bad traders, bad analysts will tell you, you know, yesterday's move in this channel, right, that we've been in for 11 days was Bitcoin, you know, dumping and dropping like a rock, and, you know, the beginning of the end, when we've been in the same channel for 11 days. You know, just let the sideways price action happen. Don't pay attention to it so much. Focus on the trend, not the counter trend. The trend is what you want to trade. You don't want to trade the counter trends. And let the trending markets, however brief the impulse is, let it work for you. Let it happen when it happens. And take advantage of that. And then let time sort of play out, whereby you can really get the meat of this move by waiting and not over trading for months at a time, for 2-3 months, however long it takes for us to reach the top of this move. So yeah, that's the play. That's the 200 IQ move, not over trading. Not by, you know, looking at every single last bullish divergence and jumping in the small time frames. Once you made your entry, you're good. All right? Take care.